Good afternoon and good morning to everyone in Africa and India, as we have participants from all across the two countries. So, welcome to the webinar on building capabilities towards business resurgence in insurance sector. And I'm really pleased to invite our speakers. So one of our speaker is already here. We are waiting for another one. So we warmly welcome Mr. Maurice Amogola. He is a CEO of Minet Group, Minet Uganda. So Maurice is a Minet is a pan-African firm specializing in insurance and risk management plus human capital solutions. He's an associate of Chartered Insurance in UK, a chartered insurer, as well as an associate of Chartered Insurance Institute of Uganda that transformed into Insurance Training College of Uganda. And he is been the past chairman of the Insurance Brokers Association of Uganda, as well as chairman of the Insurance Institute of Uganda. Maurice has over 30 years of experience as insurer. That's a rich experience, Mr. Maurice, and an insurance consultant both in Kenya and Uganda. Welcome to the webinar, Mr. Maurice.
Thank you. Good morning for East Africans and good afternoon for the guys in India.
Great. So now, our second special panelist, we are waiting. I will introduce him as he comes in. Before that, I will just give my introduction. I am Dr. Trippy Singh. I'm the Chief Learning Officer of Centum Group. Centum Learning, it's a Bharti groups, and Centum offers new age technology-based learning solutions end-to-end, and it enhances it to impact business productivity and shaping up first-time managers and mid-level leadership for an organization. I come with more than 2 decades of experience in academia and corporate at institutions like IIM Bangalore, IIM Kozhikode, Tata Services, Aditya Birla, and as an entrepreneur offering customized learning solutions. So I have doctorate from XLRI School of Management, Jamshedpur, as into leadership and HR and organizational behavior area. So very warm welcome to the discussion. While we wait for the second speaker, we should start this talking to Mr. Maurice. The first thing that we are going to focus on is how is insurance sector in India and brief about insurance sector in Africa. So over to you, Mr. Maurice, if you would like to give a little background on the insurance sector in Africa, that would be helpful.
Thank you. The insurance sector in Africa is very diverse. There are countries that are very highly developed in terms of insurance penetration. South Africa, for example, has one of the highest penetration rates of insurance in Africa. They average 13% to GDP. There are other countries which have some very relatively good penetration for insurance to GDP. I think Nigeria would be 2.5%. Kenya would be sitting at about 2.5%. Then there are other countries which are struggling to get there. And of course, we know why this is happening. Uganda is still under 1% to GDP. Tanzania is still 1% to GDP. So there are various penetration rates. And of course, it depends on the level of the economy, how diverse the economy is, and the insurance awareness in these particular countries. So, it's a mixed basket, so to speak.
That's great. So I'll just brief on the insurance sector in India. India has about 57 insurance companies and 24 are in life insurance business, while 34 are non-life insurers. Among the life insurers, Life Insurance Corporation, LIC, is a sole public sector company. There are 6 public sector insurance in non-life insurance segment. In addition to this, sole national reinsurer, namely General Insurance Corporation of India, is there. Other stakeholders in the Indian insurance market include agents, brokers, surveyors, and third-party administration. Market size of India insurance sector is expected to be about US dollar 280 billion in 2020. The life insurance industry is expected to increase by about CAGR of 5.3% between 2019 and 23. So penetration was pegged at 3.76% for year 2020, while life insurance penetration at 2.82 and non-life insurance penetration at 0.94%. In terms of insurance density, India overall density stood at US dollar 78 million in year 2020. And in India has recently seen a lot of interest in the insurance sector, and there has been a lot of government initiatives like Pradhan Mantri Jeevan Jyoti Bima Yojana, Atal Pension Yojana, and then definitely to invite and attract foreign tourists. There is special COVID-19 insurance policy that has been introduced. Similarly, there is a robust demand of insurance sector, especially the penetration of digital platform, with an average of 90% using digital platforms at least once a week. And there has been an increasing investment. Even our finance ministry has announced to infuse rupees 3,000 crores US dollar 413 million into state-owned general insurance company. And union budget for 2021 has been very friendly for the insurance sector, and there has been an attractive regulatory and development authority of India has allowed to invest debt securities of infrastructure investment trust and real estate investment trust. This is expected to provide more investment options for the country emerging startup ecosystem. So India is growing at a very fast rate in the insurance sector, and we look forward for further growth. Now, as we are looking at Mr. Kagia, Peter Kagia, our second speaker, is already here. So I would like to introduce Mr. Kagia and welcome Mr. Kagia to the webinar. We have been.
Thank you so much. Sorry for joining late.
So we look forward to have a very good discussion with you, Mr. Kagia and Mr. Maurice. Mr. Kagia is a general manager, life insurance business, the Monarch Insurance Company Limited in South Africa and in Kenya. And he is heading the Life and Pension Business Company Limited, a pan-African firm specializing in insurance, risk management, and investment. He is a fellow of Life Management Institute USA, as well as an associate of Chartered Insurance Institute of Kenya, besides being serving Honorable Secretary of the same institute. He's also a certified pension analyst, manager, and a long-serving member of technical committee in pensions and ordinary life assurance business. Peter has been a resource at College of Insurance and a certified trainer of trainers by Retirement Benefits Authority in conjunction with College of Insurance. Peter has over 25 years of experience as an insurer in Kenya. He's currently doing PhD in a business administration at University of Nairobi. So welcome, Peter, once again, and look forward to have a discussion. interesting discussion benefiting for the participants both in India and abroad and in Africa. So Peter, we were just focusing on the question which was on the background of insurance sector. How is insurance sector, or the scope of insurance sector in Africa and India? So I just gave background on India, and Mr. Maurice gave us background on Africa. Would you want to comment on the scope of insurance sector in Africa, Kenya? So, Mr. Maurice, while Mr. Peter is getting ready, let's start some questions with you. To understand a little more detail on the topic that we are going to discuss. Are you there, Mr. Maurice?
Yes, I am.
Okay, great. So, how do you see the insurance sector? What are the some of the challenges that insurance sector is facing in the overall in Africa and overall, all over different countries?
I think if you look at Africa, just from the economic perspective, most countries in Africa are developing. So it means the resource envelope is always a challenge. You will find the people are in various sectors of development. You will find most of Africa is basically agriculture, which means whereas there are some industries here and there, but predominantly most of the countries run from an agricultural base. And even when it's run from an agricultural base, it is not commercial. Most of them, apart from some of the big commercial entities in Zambia, South Africa, some of them in Kenya, most of the agricultural sector run on subsistence farming, which means even if we wanted to commercialize them and make them join the agricultural insurance bandwagon, it is a process. One, of course, as one of the challenges we have in Africa is trust. Is they believe that insurers are very strategic partners for the people, and two, the purchasing power. Sometimes because agriculture is got its own challenges in terms of demands and supply, you find that more often than not, the earning capacity or the ability to forecast how you can earn from agriculture, it's always up and down. But I think these are some of the challenges we need to manage. One is to de-risk from an insurance perspective. And then after that, if you finish the aspect of de-risking, then you look for the commodities bank, which is able to pick the produce. And then at the same time, aspect of post-harvest handling, which again is a big challenge in some parts of Africa. So the de-risking and just making sure agriculture, which is the mainstay of most countries in Africa, in Uganda, I'm sure in Kenya, as well as Tanzania, that's where I can quickly draw parallels. Some other countries like South Africa, which has got a very strong commercial agricultural base, Zambia, some bits of Malawi. The key is at the end of the day to commercialize agriculture and hence make it a business that can be taken to the bank.
Okay, that's great. So since you're talking about one of the two main challenges that we are facing around trust and purchasing power. So we have a poll question which we would want to put up to the audience and see what is the view on related to this challenge. Sarabjit, can you do the poll question with the... So the question is around why insurance sector is facing challenges of trust. So what do the audience feel on these different options? So we'll wait for some 2 minutes for the audience to respond, and then we'll move further on this.
Of course, as you wait for the consumers to respond, apart from the aspect of trust, then there is a knowledge gap. Some consumers don't have the necessary information to make the right decisions. Sometimes they will not know the level of claims that insurers are paying. And of course, if you look at all these countries, then they are having what you call regulatory supervisors to help to, first of all, regulate the insurers to be able to bridge the trust gap. And then, of course, both the regulator as well as the trade associations that are within the insurance sector are doing training to also put a deficit on the trust gap, as well as also making sure we have a well-trained workforce, because it starts from there. If you have a well-trained workforce, both in the insurance companies and in the agency workforce, then they are able to communicate effectively with the customers. And of course, in the advent of the digital platforms, there is a lot of communication that is both in the print, electronic, television, that helps also to make sure that people understand how the importance of insurance in everyday life. So all these are there to help, but of course, the biggest aspect is that trust, and we must continuously work to make sure more people appreciate and trust their insurers as strategic partners.
That's very insightful. So, Sarab, we have the response of the. Okay, so the audience seems to be divided in terms of the response. The highest response or the rating has gone for claims decline due to tedious verification process. That's the reason that they have given as a reason for trust being low and challenges of trust for the insurance sector. But the second important reason is claims not served on time. So when it is needed, it is not served. So that is another reason which is coming. The third important one is coming as service of insurance companies are not customer focused. And the last one is it is an investment without any returns. So it seems to be, the audience seems to be viewing that it is not, it is not an issue of investment without returns, not as much. It is a reason for the challenge of trust, but that is the last reason for investment of trust, which seems to be very different in Africa. So if we have to divide the audience between Africa and India, we'll have to see the total participants in how many participants are from Africa and how many are from India. So, Sarab, if you can help us get that number, that would be good. Otherwise, we'll continue to discuss further. What is your view, Mr. Peter, on the challenges of insurance sector?
Actually, much of it is basically the trust, especially in the retail. The ability to keep the promises has been a challenge, number one, because some experiences that have been there, the customer experience have been not really good, because one, you find that there is need to have a lot of processes that the customer is feeling is taking too long. When they're paying the premium, they are expected to pay, or like in Kenya, we run with what is called cash and carry. You consume, you pay first, then you consume. But when it comes to the issue of paying out the benefits, we need many of documentation that come on board. It means that then the relationship is not really smooth during the customer journey. So that aspect of trust is very important. And one of it is, are we able to serve, to keep our promise? Are we able to pay claims of what's called benefits in time? But sorry that we had a technological problem in joining the meeting.
Mr. Peter, and so the next important thing is that how are we when viewing the resurgence of impact of technology on in the insurance sector, where how do you see technology is impacting the insurance sector? If I have to tell a story that which I was reading, which is telling that in the next 10 decades, in the especially in the developed countries, the insurance sector is going to, technology is going to be really go deeper into insurance sector, which would mean that even a vehicle which you are about to bus. So somebody is asking for a vehicle, technology is telling which vehicle to take, and then telling about the route to take, and based on that, the route, it is assessing what is the risk of the accident to happen, and based on that, it is suggesting that if you take this route, your insurance premium would go up and down, whichever route you follow. And once you have chosen a particular route and reached the destination, and if something happens, then there is a drone that is coming and trying to assess the quality of the nature of damage that has happened, and the insurance companies are able to give you approval of claims immediately. It will become very fast. Those kind of technology going deeper into the insurance sector. So what is your view, Mr. Peter, on the impact of technology in the insurance sector?
Thank you, Dr. Trippy. I think technology has really made an impact in the process that we have customer value proposition. One is the issue of communication. You remember that we mentioned in the past engagement that trust becomes a question and keeping the word. So start from knowing the customer, which is very important. When you know the customer, you work with the customer journey throughout the policy period. When it comes to issues of payment and benefits settlement, that should not be a problem. So it helps in that area. And number two is also the issue of basically giving customer experience. As like now, technology is coming handy, where we are told to keep distance, especially this period of the pandemic session. A customer can get the value and can transact. The engagement with the customer and the service provider is actually seamless. They can transact from the comfort of their houses or their homes. And that's actually another area that brings some kind of pain points removed, and will help us building up the trust in terms of our engagement. Of course, comes with a risk. The issues of cybersecurity is on board, but that's a risk that can be well maintained, especially the issue of data management and aspect of confidential information of the customer being on board. So those are also coming in, but also all of these are centering around the trust, which I think is a positive in engagement in the customer journey.
Okay, that's great. Mr. Maurice, what is your view of the impact of technology? Where would it go deeper into the insurance sector for Africa and for the developed countries? How do you see that?
Technology will change or has changed the way we do business. You remember about 20 years ago, you would have to sit on a typewriter and type out a policy. You'd have to have clauses pasted on the policy and so forth and so on. Now, all these things are in a computer. What you simply do, it's already prepared. And what you only do is the details of the customer that are input on the computer. Two, communication, which is key in insurance, is easy. Through the digital platforms, you can reach millions of customers just by putting together a message that talks to them about certain aspects. And definitely one of areas to breach areas of trust is communication. Claims payment, as you saw there. If we can continue talking to clients about how many claims are being paid by insurance companies, how many catastrophes are happening and insurers are coming in to pay, through a communication medium, then we are able to bridge the trust gap. And of course, technology also means we can turn around quickly. You can get a policy within minutes, within hours. In the past, we would do this over a week or two. You can complete your form online. You don't have to wait and fill it by hand. And then after that, it has to go through an agent who has to take it to the office. Then the rating is done. Nowadays, because of technology, you can actually even commit your risk or commit the business through the digital platform. So things have been made easier. Of course, we have not been ready for this. We need to go through lots of education. We need to understand how to reach the customer using the digital platform. As I said, insurance is a matter of trust. So one, it was easier, it was harder even when we were just seeing people face to face. Now you have to communicate to some person through a platform. You have to do through a Zoom. You have to complete a deal using a medium of communication, which means the customer is far. So the issue of brand management, the issue of educating the employees on how to use these many platforms so that the customer can get the necessary trust that he's dealing with the right people. And then because of, again, the digital platforms, we should now be able to even pay claims more faster than before, and hence improve on the customer engagement. So by far and large, the technology will help us. Of course, we have to go through the learning gap. We have to train our people. We have to change our models in the colleges to appreciate how to position yourself when it comes to technology and how best to use technology to reach out to customers. But the key here is to bridge the trust gap. As soon as, especially in developing countries, once we bridge the trust gap, we'll have more premium coming in, we'll have more people being catered for, and then the cost of insurance will come down. You know, as many more people come into the insurance fold, the cost of insurance normally will come down. But if you have few customers, then the risk becomes very high, and the insurer definitely has to charge premium for that risk. So we have a very key, important requirement to train as many people as possible in terms of insurance. I'll just give an example like Uganda. The government gave a subsidy for agriculture insurance. We now have a subsidy worth about 7 billion Uganda shillings. 7 billion Uganda shillings is about $2.5 million, which means any farmer out there or any groups of farmers who are out there, they can pay 30% of the premium. The government will pay 70% of the premium so that they can make agriculture a product that can be taken to the bank. In the past, this risk was met by the farmer on his own. But knowing the importance of agriculture in our society, the government of Uganda has put in money to make sure that encourage more farmers to get into the insurance. Now, with agriculture insurance on board, banks can lend you money because they know that I'm lending money, and if the seeds don't germinate, if there is a drought, if there are pests and that can destroy the crop that is growing or the animals that are being reared, then there is compensation. So it becomes a bankable business. You can rely on it to borrow and be able to run it over time, and of course then help into the growth of the economy and then have people employed. Now, once you have things like agriculture insurance, you have things like satellites. You know, I think in Africa, we're now developing our own satellites, which we didn't have in the past, to give us information. Through this information, you have, as you said before, drones, which are now able to give you a lot of information. Agriculture, which now you can use a drone to be able to know which area of your farm requires which action. So it will tell you, here, apply fertilizer. Here, please, water is not enough, put more water. Here, maybe it's waterlogged, maybe do some drainages. And all this is because of technology. You're not just using your eye, your naked eye, you're using tested methods through technology. So Technology will be a very strategic partner. The key thing is to learn how to work with them and to make work easier. Thank you.
That's great. So I hear both you and Mr. Peters saying that technology is really getting deeper into the insurance sector, and it would help us better manage our claims, better reduce the risk, and especially the risk assessment can be done proactively rather than reactively. I mean, afterwards, after the things have happened. And the role of insurance sector or insurance agents is changing from just being an assessor and selling the policies to educating the customers and also proactively reduce the risk. I mean, the things or happenings that would cause insurance to have, I mean, to be given, insurance amount to be, claims to be raised. So, and then definitely this is also going to reduce the underwriting and the pricing part of the insurance sector. Because of technology, we are able to see that, I mean, things which needed 5 people or 10 people can be done using drones, or it can be done more accurately. And there are things which there is a huge data which is available, which can be analyzed, and through that risk assessment can be done proactively, and that would lead to getting the claims quickly. And definitely, as you both mentioned about distribution, educating the customers the importance of insurance, having an insurance is also going to be at ease with the use of technology. And I believe that, I mean, both of you are also saying that it is definitely leading to build trust on the insurance sector. Now, with this, wanted to check with you as to, I mean, with technology coming in the insurance sector, how are the capabilities required by the insurance sector professionals are likely to change, and what are the new skill sets that the insurance sector would need to develop, or people in the insurance sector would need to develop? So, Mr. Maurice, can you please reflect on this?
Thank you, Doctor. I think, first of all, insurance is a very unique area of professionalism, which is built on 6 or 7 principles, which I'm sure people in the insurance industry will know, but our clients, we try and reduce them into conditions that sit in the policies. One is utmost good faith, another one is indemnity, another one is proximate cause, because you want to pay for what has happened. You don't want to pay for things that you didn't contract for. So all these principles then are enshrined in the policy. So that's the first base. Once an officer in insurance understands that, then he needs to be a good communicator to the potential customer. And being a good communicator then is able to make the customer, first of all, appreciate how insurance helps in terms of strategic management. You see, all of us in life go through very many risks. Even today morning, there was a risk that you are either going to wake up or you would not wake up, and we will hear, oh, that guy has rushed into hospital because of one thing or the other, or you met an accident on your way to work. Nowadays, now that you are working even remotely, and you can work from your room at home, there is a chance that something will interfere. A risk will come, maybe an earthquake, maybe a flooding, and many other things. So this training, you have the basic training on insurance. Then I think largely we have to become good communicators. We must be good communicators of the insurance, and then we must use technology to communicate to the potential customer, because that then helps us to move rapidly to different communities. I'll give you an example. I talked about agriculture, and more often than not, you realize that we have many people who are unemployed who sit what you would call at the bottom of the pyramid. Now, if they put themselves into organized groups, In East Africa, we call them savings and credits societies. Then they are able to borrow. Then they are able to use communal land. Then they are able to take on what you call group medical insurance, which helps them to de-risk as much as possible. So insurance, once they know that insurance becomes their partner, the risk can be easily assessed. The cost of it, because you are coming in groups, is reduced, because then not all of you become sick when a plague happens. Even COVID is not taking everybody, and that's why we are saying people need to be vaccinated. It will help in sort of mitigating the risk to some extent. So technology is an area where we have to learn how to navigate, how to apply data. Data and statistics is a new phenomenon. And then, of course, we have to understand what are the customer needs. What are the customer needs? If we don't understand what the customer needs are, we can't keep on preparing our policies from the shelf and tell the customer, you buy this one. No, we must understand what the customer needs and then produce a policy that fits the risk of that customer. Make it user-friendly so that because of the experience, he becomes an ambassador for insurance. So technology will really help us to bridge that gap, but the learning lessons will be to take our technical information that we learn, which I've just enumerated, and break it down to a level where we can become effective communicators through the digital platforms.
Okay, that is great. So, Mr. Peter, I mean, definitely, Mr. Maurice has talked on various aspects: communication, data, customer orientation, and understanding of technology. I mean, different aspects that would become important as a capability of the insurance sector. Do you want to add, Mr. Peter, to this list? What are some other capabilities that we would require?
Thank you. I think if you look at the customer centricity or keeping the customer at the center of all the engagement, one area that comes and we say a challenge is basically the aspect of penetration. You realize that in the developing countries, especially in Kenya, we are still talking of less than 2% for life and less than 3% for the total penetration of the insurance. And what are the attributes? One, the distribution aspects has been not so much even, and that is basically where technology would actually factor in and help the people who are supporting the distribution function. That's the agents, the brokers, and all the other intermediaries that come on board, the banks and the likes. One, it helps them get to know the customer first because the data is available. And two, they get to know the customer first. And they also spread the geographical reach. The experience has it that most of the people who are consuming insurance solutions in developed countries are mostly in towns. But right now, because of technology, we can reach many more people who are living out of towns and urban areas. And also the trend is that even for the individual lives, the trend and the focus has been on people who are on payroll. So you find that most of the solutions are going in to the people who expect to get check-off payments through check-off. How about those people who are in informal sector? And you realize that that's a developing area. So technology is coming to bring in those aspects of aggregators into this platform so that at least they get the benefits. You look at the products that we have, they are so much tied to what we do as the underwriters, not what the customer would like us to have. But with the help of technology, I think this is coming on board to actually change so that we customize the customers, the solution that we are offering in the expectations of to meet the expectation of the customer. And another challenge that has been in, and a few research has been done around this, is the issue of affordability of the solutions that we are offering to the members as such. In terms of, if you look at the pricing, technology comes in to cut into this because one, you have the information about the customer. You can now evaluate the risk that is coming on board, and that person is actually having controls in terms of those risks that would be coming on board, especially from the underwriting perspectives. You are able to give discounts for those risks that are below the expected, and also charge a little more for those high-risk customers, so that at least you are able to keep your promise. So that is coming on board as such. But then aspect of awareness, the promotion aspect of the awareness, how do we give out, how do we make the customer to be aware of the availability of these solutions and these solutions that will be able to meet their needs? So technology has come on board, and most of the narrators in the developing countries, especially in Kenya, have actually made use of the web-based communication, the internet communication, so that they use they give out, and even the cell phones, the mobile network, so that you find that there's communication here and there, so that that awareness is not is taken care of. The creating awareness would and then help in making the customers to get impressed into to be motivated to look for these solutions. And there are those who are having the toll-free phone numbers. You call and then you get a consultant who is able to give you work with the customer in the journey of identifying the needs and then closing the sales. So in as much as we are still depending on the traditional distribution channel, which is for retail business, the brokers and the agents, we've seen some digitalization coming on board. And this is actually creating some awareness and helping in the distribution of the solutions that we have on board for the customer. Thank you.
That's great. So I see that both of you are emphasizing the penetration of technology in the insurance sector and how that would be one of the key things that one will need to learn as an insurance professional. So we have a poll question. Let us also hear from audience. What do they think that which of these skills will become the most critical, whether it's technology, client orientation, analysis, data analysis, or the big data kind of a thing, and learning orientation. So what is the audience thinking around which is the most critical? Let us wait for 2 minutes and then we'll get into on the last question, and then we'll open the stage for audience to ask questions. So meanwhile, while the audience are responding, Mr. Maurice, the next question I'm posing to you, and which is, how do we develop these skill sets? What are the ways and who should be responsible? The organization, self? How do we develop these capabilities in ourselves?
You heard Peter mentioning something called promise. Insurance is a promise. And at some point, if I put, say, $100 in a bank, after 3 months, I am very sure I'll get maybe $90 back because I have been able to save it there and I'll get it when I get there. But for insurance, the key messaging here is that it's risk. The risk that an event will happen or will not happen. And the insurer will say, for this event, I will charge you $50. Or the risk for this happening and we paying you an amount X, which is normally 10 or 100 times more than the premium, will happen. So for us to get there, we need to, first of all, then use our colleges, our local colleges, first of all, to develop the skill sets to be able to mold the necessary professionals within the insurance sector. And that's why in insurance, you have doctors, you have lawyers, you have engineers, then who are then molded into risk managers. You first of all learn a particular profession as your core subject in university, and then you come into insurance because the same data that you are reviewing as an engineer is the same data you'll come to review when a loss occurs, or when you are saying these type of risks need sort of risk management practices. And out of that, if it happens over a group of 10 and 2 of them will happen, we need to charge this amount of premium. So one is to equip our colleges with the right trainers to be able to train the insurance colleges. And then we have like Centum Learning, who can then develop specialized trainers who will actually train the already skilled professionals in insurance to take it a notch higher, to use digital technology and data analysis to be able to then speak to the customer. So there will be two elements of it. The local colleges, of course, changing the curriculum slightly. There will always be need to start insurance training right from the word go, right from primary school. Some of them will go to secondary and high school, right into university, because risk is everyday life. As soon as you are born, there are many risks that you face. So it is important for people to know, how do you avoid these risks and what do you do? You will find that for the middle class and some upper class, the father will tell the children, oh, I have medical insurance for you. But you have never explained to these kids what is medical insurance. But there you are, you have medical insurance by virtue of being an employee of company X, or you are a businessman and you said, hey, this is a big risk for my business. So I will insure myself and family and my employees against medical risks. So that training from that individual level, the training from the colleges, the specialized training with some of the specialized learning centers, because it is the customer experience. How do you digitize to a level where the customer will feel is getting sound knowledge to make decisions about insurance risk? As soon as we're able to do that, you will see a huge upsurge in insurance uptake. Peter was mentioning that the penetration of life insurance, which is almost near to what we talked about in the bank. You see, in a bank, you say after 90 days, I'll get my $90 and I'd kept there 100. Life insurance, especially endowment insurances, these are savings. And of course, all of us, as we grow in life, we are always told to save, don't spend everything, save something, save something. So through life insurance, you can save. As you save, there are two aspects that people do not normally realize. First of all, you get the savings after 10 years of your saving, or God forbid, if you die, you've created an estate. And this estate will be worth the value of the contract you signed with the insurer to pay your next of kin if anything untoward happened to you. So, and that is the difference between banking and insurance. But we need trainers and we need very specializedly trained people to know that without savings, without insurance, you will not be able to move very far. Even banks cannot lend you money if the insurance is not there. They say, bring the insurance to confirm that you have insured that piece of equipment. Bring insurance to confirm that should anything happen to you, I can cash on your policy. So all these are very important, but the starting point is the training schools and the higher training schools and the specialized training, but with a special focus on digitization. Thank you.
That's great. That's great. So you have actually covered three different aspects of development. One is, developing the orientation towards insurance, how to be ready to face risk, if risk or untoward things that may happen in life, which is all, which is generally all part of life. We never know when it happens. It's an unseen, unforeseen things that happen to life and also to businesses and other products. So one is building that orientation mindset from school, colleges area. Then there is a specialized school education or college insurance education, which is building knowledge about the insurance sector, developing what all is done in the insurance sector, what are the key things that are there. And the third level where you're saying specialized learning, and where Centum definitely comes in, and we do both digital and face-to-face and other ways of training on different aspects of insurance industry. Say we are talking about risk, claims, and other things, how to go about enhancing, and especially the use of technology. We have done various programs in India in various companies. These are the different three levels that you have touched. That's a very, very encouraging to know. Mr. Peter, would you want to add to this? Anything?
Thank you. I think
before we go to Mr. Peter, Sarab wants us to go through the results and results of the the poll that we had put, and technical orientation, educating self and clients has come as the most important critical skill set that is required for the insurance sector. The second is client orientation, which both of you are touching upon, which is very important. And then it is data analysis, and the last is learning orientation. So this is the result which people are saying, and definitely we have, if we had added more areas that Mr. Peter has talked about, or Mr. Maurice has also talked about communication and other penetration, that would also be part of it. But out of these four, technical orientation is coming as a most critical skill that one has to learn. Yes, Mr. Peter, sorry to interrupt you in between. How would you want to add, how should one develop these skills, skill set, and would you want to add to the list?
Just to add on what my brother Maurice has mentioned, I think another area is that we can't do all this without the environment in which we are operating. And government has a very key role in ensuring that the customer is who is a citizen is taken care of. And most of the governments, in terms of their policies, like in Kenya right now, we are working on national policies on insurance, which is so much into building the trust for all insurance solutions and making sure that both the investor insurance is taken care of, the shareholder, and even the customer is also taken care of. So that comes in on very handy. There are also areas to do with the incentives, the tax incentives. Like in Kenya, there is a tax incentive for the people who are taking insurance, especially the personal life assurances. There's some rebate that's coming on board. So that is a motivation in terms of driving the insurance penetration and basically uptake of insurance and developing the capacity. And besides that, there is also that aspect of consumer protection. In the unlikely event that I am not happy with my service provider, I know I'll have other processes that will come on board so that my interests are also taken care of, my rights are taken care of. In case the claims are not paid, what can be done with? Is that the question? And in Kenya, our regulatory authority is so much into protecting both the stakeholders, the customer, the professionals who are actually have to meet standard level of education and experience to handle key areas in the insurance sector, and also the customer. In the event that the customer is not happy, they are having the doors open, and they normally have a tripartite discussions to ensure that the customer is actually taken care of.
That's great. That's great. So now we have participants really eager, asking various questions which are there. Let us focus on one of the questions that Mr. Philip is asking is, what are the effective ways of counteracting the trust issues in insurance sector? So Mr. Maurice, would you want to answer this question? What are the effective ways of counteracting the trust issues in the insurance?
Yeah, trust is at the core of insurance, and a customer will not come to you if he doesn't trust you. And that's why you see most organizations do a lot of branding. The first thing they will do is to brand, is to say, I'm here, I'm in this color, my blue, I'm blue as the sky, or red like ABCD. But it's to create a brand and then to create trust. But trust is built on believability, on meeting the promise. 30 years ago, and insurance started in London in the 1960s. An insurance policy had many wordings. And those wordings would confuse anybody, even a professor of English in the UK. So over time, the insurance language has changed to very simplified ways of being able to communicate with the customer. So it's very clear what the contract spells out. 2 is the effective communication, and 3 is ensuring that we walk the talk. We pay claims, especially from the insurer's perspective. The moment people know, oh, this fellow was injured and he had taken a personal accident insurance, he was compensated. That family, the breadwinner passed away because of he had a life policy, it was paid. And that over time, when people know that insurers are paying out claims, and then they will be able to build the trust. And of course, coupled with effective communication from both the regulator and the consumer societies and just the whole ecosystem of people building believability. So, and the test of the pudding is paying the claims. If people see that companies are paying claims, they build more trust. When you remember when we didn't know how to manage AIDS, remember there was a time, I think in the 80s, Peter will tell you because he's a life insurer, and because they could not have any data on AIDS, no insurer was covering AIDS. And because also the scientific breakthrough in terms of how to make people live longer had not been. So you would find most policies would exclude AIDS. So this consumer will say, but if I take a life insurance and I'm likely to contract AIDS and then I will not be paid, or my next of kin will not be paid, then why have I paid all this premium for? So I think, again, insurers are being asked to go back to the drawing board. As we sit now, and I don't know about in India, and Peter will tell you about Kenya, COVID has been declared a pandemic. Yeah. Once you declare COVID a pandemic, it means it is out of the control of the private sector. It becomes a responsibility of the government. But here is a person who had medical insurance, and COVID does not come and say it is something else. COVID will come in the form of diabetes. COVID will come in the form of accelerated cancer. COVID will come in many other manifestations. So you can see, if the insurance market does not come up with something small to say, yes, we know this is a pandemic, but we will pay 40 cents to the dollar of any patient who is suffering from COVID-related challenges. It means the client has been left bare, and his trust value in terms of insurance has gone very, very low. So as an insurance market, we need to be sensitive. Of course, it means our reserving, and Peter will tell you what is meant by reserving, must be very robust, so that when there are problems, you can come to the table. You might not come 100%, but at least you will tell the client, I will meet you 40% of the way, because it's a pandemic. It's going to affect many people, but I know you need to have something to cushion you from this particular problem.
Since you're talking about COVID, there is a question which is saying, how has COVID impacted the insurance sector? So that is one of the questions that the participant wants to understand. And there is another question that I have for Peter, which would be after you answer this question, I'll ask him, which is by Andrew M.I., which is very interesting question. Yeah, how has COVID impacted the insurance sector?
I think Peter will add a lot of information on this, but from the Ugandan perspective, it has made us get out of the comfort zone. It has made us to think much more deeply about how to serve our customers. It has made us, I'll tell you, for my company, we have now digitized everybody, which was not the case. I mean, we were used to coming to office, all of us, sit on your desktop, work from your desktop, and everything was okay. And then you would go home and come back the following day. Now, everybody carries a laptop, everybody carries a MiFi so that you can get access to the internet. We are now, our meetings are on Zoom. So we have changed completely. All our meetings are on Zoom, or they are on on Teams. And the client is not going to say that don't meet. He will still say, no, no, no. You still have to do the standard operation procedures because of COVID. So how else are you going to make sure the client is happy? How are you going to make sure the client gets the necessary service? So COVID has made us to really embrace the digital platforms. And I think it's something good for the betterment of the industry. Of course, we need to be careful that we don't lose out on the social cohesion. But I believe the digital platforms have made us accelerate a very important aspect of growth for the insurance industry.
Great, great. So I'm moving to Mr. Peter for a question which is by Andrew M.Y. The question is, how does social insurance system and tax burden of economic activity affect entrepreneurship and innovation? How does social insurance system and tax burden of economic activity affect entrepreneurship and innovation?
Thanks so much. I think I'll break the question into two aspects. The first one being social insurance setup and looking at the innovation. And basically, I'll take it to be also aspect of the development of the insurance with the perspective of the insurance sector, if I got to try it. The social insurance sector is key in covering the risks because we are looking at the individuals who are under one geographical area. And I will take this social insurance like in Kenya, we have specifics that are being driven by the government. And then that would be actually the lead, especially for the aspects of the government policies to drive that need of insurance. And I also counter it with the aspect of the innovation. That is the growth of new solutions that are coming on board. And I would have it as the first line of defense in government sector, because the government is basically the first level of defense in terms of insurance solutions or risk management mechanism, both in life and non-life area. And what comes on board is that how is this social insurance infrastructure geared towards meeting the actual and emerging needs of the customer, who's the citizens of the country. And the customer here has emerging needs and actual needs that comes on board. You look at the aspect of removing the pain points from the current customer and what these social insurance infrastructures will actually come on board.
Okay.
One, research is very important to get to know some of these areas that come on board. Two, the facilitation that come on board, because the network, the government, the social insurance infrastructure can reach areas that the private sector might not be able to reach definitely because of that actual need, like geographical areas. The private sector or the private arrangements would go into areas where there would be a balance between profitability and maybe return on investments. But the government would go into areas where they look at the long term or opening up of those areas and come with solutions. So the aspect of research is very important. They can fund from the funding from the research through policies of the government. They can do research and get to know some of the needs that are coming on board and come with the product in terms of products and solutions that are coming in. In terms of distribution, the social insurance infrastructure is well spread to areas that maybe the private sector might not be able to reach. So the REACH program is very important.
That's great. So for want of time, we are running short of time. There are several questions. I'll just ask one last question to Mr. Maurice. What is the future of insurance sector? That this question is given by Rakesh Kumar. So Mr. Maurice, and feel free, request both Peter and Mr. Maurice. There are several questions that are put by Andrew M.Y. We can answer writing to them, and they can connect to us. Before that, the last question, can we get Mr. Maurice, get your views on that? What is the future of insurance sector?
Doctor, insurance is here to stay. The only aspect is what aspects of risk management in society will they cover? And you gave an example, a very able example. If you look at automation of vehicles, definitely we are now going to, in the next 15 years, one, vehicles will not run on fossil fuel. They will be running on probably electric cars. And two, they will be driverless, which means they will be having so many sensors and so forth. So what happens is the cost of accidents will be determined even much more accurately because it's all driven by technology. So whereas, I don't know about India, but in East Africa, Peter will tell you that he pays about 5% for his comprehensive motor vehicle insurance. We almost pay the same here. But because of automation and technology, that might likely reduce to about 2% because premium is based on claims. If the claims are very few, then premium comes down. So what insurers are likely to do is to ask themselves, where do we deploy our capital? Where are we seeing big risks? So you will find that the cost of retail insurance might come down because of technology. And then the cost of the corporate risks might go up because you can't have a hydropower plant. You can't have a nuclear plant overnight. These things are planned for in years. And of course, based on technology, what insurers do and what they do with the engineering teams is to provide modeling which is able to predict the likelihood of a loss. Once we predict the likelihood of a loss, then we are able to determine the cost in form of insurance premium. So whereas insurance for the retail will come down, whereas depending on, I don't know what Peter will tell you, you know, there was a time we would say we will live up to 60 years or live up to 50 years because of AIDS and other things, diabetes, cancer. And then because of that, if you took insurance at a particular point in time, your cost of insurance will be X. Now, if they can predict that people are living up to 70 years, people are living up to 100 years, so the cost of insurance also changes. So insurance will not go away in a hurry. And as long as we are all developing, as long as we are going to the moon, you saw the other day people went in outer space, those risks were insured. Even if they were billionaires, they also took insurance. So risk management is all about mitigating and then transferring to an insurance company for what you cannot put on your balance sheet. And that's why insurance will be there. Thank you.
Thank you. That's very promising. That insurance sector is going to be there, and it is going to probably, the way you are saying that for every aspects of motorization, everything that technology coming in, we will have a better way of mitigating risk and also be able to, give a better claims outcome. And that is definitely going to enhance the use of insurance sector, both for different components. Just on this, Mr. Peter, how do you see in the life insurance sector, because you are expert in that area?
Thank you, Doctor. Basically, just to add on what Maurice has mentioned is that insurance as a means of risk mitigation mechanism is here to stay. The only thing is that one, with the technology coming on board, the cost of risk would be especially affordable because then the data is available. We are able to evaluate the risk effectively. In terms of distribution, we expect to have much of contract, awareness, and that would actually help in terms of penetration and uptake of the insurance, because irrespective of whichever area you are in, you are able to. And then the aspect of globalization and internationalization, you find that irrespective of whichever area you are, I can go to the internet and search and get the solutions that I need, put my data specs, and able to get a solution that come on board. So out within a reach of maybe through the internet and my phone, I'm able to access the information and compare the cost of all this. That gives the customer the power to make a decision of which is a solution provider is available and the specific needs of that come on board. But that's what brings in some aspect of going forward. A relationship with the customer in the customer journey becomes very important, because then you become relevant to the customer as you move on from the time that the person takes insurance, maybe age 18 or whichever law, and to the time that the person retires. And there's a variety of insurance solutions that come on board, both for retirement benefits and including the life and maybe for investments and like the endowments. So like life insurance, we are here. The only thing is that technologies bring in some aspect of affordability, accessibility, and cost. And whichever area you are in, you're able to get this. And some of the roles that would also be redefined are areas to do like areas like underwriting, the paperless information, the data analytical capabilities. So the only challenge that comes on board is for the insurance service providers to build their capacity, build the capacity of the staff, build the capacity in terms of technical infrastructure, and make the customer experience enjoyable.
That's great. That's a very powerful ending statement. Build the capacity of the staff, build the technology of the company, and that give customer a enjoyable experience. And powerful statement that you're making, Mr. Peter. With that, I think there are several questions that are coming and which have come, and it's been a very, very, very informative for discussion on this this topic. Thank you both for coming and enlightening us and everyone in the audience. Audience, feel free to send some questions. We will send it across to the panelists to answer later, because there are several questions which remain unanswered due to shortage of time. Especially Mr. Andrew MY has several questions: how the concept of life cycle has been applied, what is the best framework to use for automation of insurance underwriting, and things like that. So that can be answered later, one-on-one through communication. Thanks a lot. With that, we close today's discussion. Thanks both Mr. Maurice and Mr. Peter for joining us and enlightening us on this topic.